Welcome, my name is Rob. We are here to look at ELCO. ELCO Task 2. So what we want to do is to make sure that you are confident of being able to score solidly in your assessment task 2 for elements of costing. So what is this task all about? Well, this task is all about cost classification and cost behaviour. And this is one of the most basic areas associated with costing. Yes, it may sound basic, but the sort of thing that we learn here is fundamental to your success at levels 2, 3, 4 and further on into the future. Now, before we begin, let's think about it from the perspective of your examiner. Your examiner says that this is one of those tasks that almost everybody meets expectations, but almost nobody exceeds expectations. Now, the way I understand that is that you can't exceed expectations because the expectation must be that you know this. Okay? So, given that you know it, let's just make sure that we get it right for the examiner. So, before we even look at an assessment task, because the task should be quite straightforward, let's go back to absolute basics and talk about cost classification. And I want you to tell me what is going on. I don't see why I should do all the hard work when you guys are there just to assist me. Okay? So, is anybody awake out there? Would anyone like to say hi to me? I'll give you a moment to respond. Now, when we're looking at cost classification, the first thing that we want to look at is to look at cost classification by nature. By nature. Now, what do I mean by nature? In simple terms, we want to classify into what is a material cost, what is a labour cost, and what is an expense. Now please be careful here, we're using the costing term of expense. We don't mean expense from the financial accounting perspective, we're talking proper language here. Okay? So, how do we make a distinction between on the one hand, material, on the other hand, labour, and on the third hand, does that make sense? Expenses. Well, here is my highly sophisticated idea. I don't know if you'll be able to cope with this at this time on a Friday afternoon, but if you can touch something, it's material, okay? If when you touch that thing, it touches you back, that's labour. And if it's neither material nor labour, it must be an expense. Okay? So, pretty simple stuff here. Let's just suggest, just for fun, that we have, we're making a delicious cola drink. So we're a cola drink manufacturer. Okay? And if we're a cola drink manufacturer, what sort of material costs do we incur? What do you think? Well, okay, presumably lots of sugar, you know, to rot the teeth of everybody who drinks cola. Yes? Anything else? Water? Yeah? Presumably they put it in tins or bottles. So, should we just say that we've got aluminium to make the tins, or cans, whatever. Yeah. So we've got those sort of materials. Anything else? Well, there are many other materials that we will incur costs on. Things like, you know, a small thing like a factory or a bottling plant. Yes? An office. Because, you see, these pass the test of can you touch it sort of thing, you know? Right? Yeah, I think you can touch an office, can't you? Yeah? If it fell on you, you would know about it. Okay? Labour. You've got that guy who sort of fills each tin or each can with the filler. Is that the way it works? Okay. So we've got a direct operative, and I use that term very much advisedly. You've got a supervisor, you know, the person with the clipboard that goes all the time. Okay, you've got possibly the most important person in the whole of the environment, and that is the accountant. Yeah, you've got that guy with a very poor pallid complexion, you know, a very unhealthy look to them. It's quite large, yeah, and no teeth, yeah, the taster. And these are the sort of examples we have of labour. And when we look at expenses, we've got lots of things here, from things like rent and rates, if we do rent anything, yeah. We've got royalties. I don't mean those that are having babies at the moment. I mean the idea that if we are using somebody else's recipe or somebody else's brand, we have to pay them for the use of that brand and things like that. So these are the sort of things that we have. And to my mind, I don't think it is difficult to classify by nature. We can do it. We understand it. Okay? And then we move on and we say, well, okay, what we could do is we could classify by traceability. Now, the idea of classifying by traceability is to classify whether they are direct costs or indirect costs. So what do I mean by this? Well, all I mean is this idea. Some costs we can link directly to the product. Okay, so direct costs are those that can be traced directly and in full to the product. If you want to say to the cost unit, feel free to do so. Knock yourself dead. Okay. Whereas, in simple terms, indirect costs cannot. Okay, cannot be traced directly and in full to the product. Now, this is a very important distinction, because what we see here is that the sum of the direct costs is called the prime cost, and the sum of the indirect cost is called the overhead. And I'm sure you've come across the idea that the way we treat prime cost and overheads is fundamentally different. Okay, so we've got to be able to classify by nature and by traceability. And if we just go back up here, I think what we could see here quite easily is that things like sugar, water and aluminium could be described as direct costs, on the simple basis that you can measure accurately the amount of aluminium, water and sugar, so if you wish to do so, that goes into each tin or can. Yeah? Whereas things like the factory and office would be indirect. Yeah? The direct operative, well, there's a clue in the title there, a direct cost, whereas any supervisory or management role will be indirect. The accountant, indirect. The taster, also presumably indirect. What a job. Okay. And then, of course, you've got things like expenses. The vast majority of them are indirect. I've given you an example of royalties because it's one of those few direct costs as an expense, a direct expense, on the basis that typically royalties could be charged per unit sold. Okay. So here are some fundamental definitions that we have. Now, another thing that we get very excited about here is the wrong colour, it's frustrating me, sorry. Production or operations. And what we have here is we simply make a distinction between, on the one hand, production or operating costs, and non-production or non-operating costs. Now, this distinction is made for a number of reasons. You could say, from a financial accounting perspective, you could say that this is where we have our cost of sales and our expenses. But from a management accounting perspective, we're simply looking at cost control because we want to understand where things arise. Okay? And it should be pretty obvious which of those costs is and which of those costs is not directly related to operations. When you have a factory or something like that, it's much easier than other aspects, but normally the delineation, at least from an exam perspective, will be very straightforward indeed. So that's one whole area of this task. It's just something that you should be able to find is very straightforward indeed. Now, the other area that we've got to get terribly excited about is we've got to look at cost behaviour. You know, well and badly behaved costs. And when we look at cost behaviour, what we want to focus on, pardon me, I just have to go and find my ruler I had earlier. There we go. Right. Is we want to focus on two key distinctions. We can get more sophisticated, and you will do when you get to level 3 and level 4. But all we want to look at this level is we want to look at the variable cost and the fixed cost. Now, the variable cost varies proportionately with activity. Now, I've introduced a term there, I've got to be careful with this. Activity simply means units produced and sold. Okay, so not an issue there. Varies proportionately with activity. So, if we were going to draw a pretty diagram here, a pretty chart, and we talked about the units produced and the cost, all we would expect is this sort of relationship. As the number of units rise, so does the cost. We have a straight line rising through the origin. Okay? Very straightforward indeed. Okay? Double the number of units, double the cost, etc., etc., etc. Okay? So, whereas when we look at fixed costs, they may be called period costs, and they do not change with activity. Now, anybody can say, that's not a very good definition, but I think it's a perfectly decent working definition, and we could definitely refine it, you know, within the range of activity and lots of other things, but it will certainly work to begin with. So, if we were to look at our units and our cost, all we would suggest is something like this. Now, okay, we've got examples here. All I want to do at this point in time is to say, well, look, whatever you do, some people, now don't do this, some people would say, well, aren't variable costs a bit like direct? And aren't fixed costs a bit like indirect? And all I'm going to say to you is, if you have done that, wash your mouth out with salt and water. Okay? Because there is some similarity, but they are not the same. They are clear definitions. Notice one relates to behaviour and the other one relates to traceability. Okay? So, if we're looking at our variable cost here, let's just go one step further. And say, well, what could you say about cost per unit in relation to the number of units. Okay. Here we go. Are you ready for it? So let's say we've got 100 units. You don't have to get this down. And we have a cost of 1,000. Yeah. And we have 200 units. And we have a cost of 2,000. And we have 50 units. And we have a cost of 500. Does that make sense to you? Are you happy with that? Yeah. And I suppose you can say 0 and 0. Yeah. Okay. What I want to say is, well, look, if that's the sort of illustration of a variable cost, does that make sense to everybody? To get the cost per unit, we divide the cost by the unit, and what we get is we get 10, and we get 10, and we get 10, and although we can't really prove it, we get 10, don't we? Yeah? So what we're seeing here is that on a per unit basis, okay, on a per unit basis, the cost per unit is a constant. And that is absolutely fundamental to all of cost behaviour and underpins all of this stuff that we'll learn about contribution and break-even, exciting stuff like that. Okay. Whereas I suppose just for completeness sake, we have to look at this little chappie. If we're looking at fixed costs, and I make up some numbers. So if we've got our units and our cost, we've got 100, 200, 50 and 0. And we start, let's just say, with the same £1,000. What do we know about fixed costs? I know. The only way you can describe it is they're like fixed. Yeah, I know. That's about as good as it goes. They remain the same. So 1,000 divided by 100, that's 10. Divided by 200, that's 5. Divided by 50, that's 20. Divided by that, ooh, that's a big number, infinity. So what we see here, and yes, I know I'm going to have to use the tongue. Are you ready? We get something like that. So I suppose you could say it's the economies of scale or something like that. But the higher the volume, the more by which the units reduce in price. So, okay, this is pretty simple stuff. We've got our fixed, we've got our variable, and we're keeping it nice and simple. And there's only one thing more I want to show you, really, and that is my pet rabbit. No, that's another. What we typically see is this. If we're looking at costs, most costs display a bit of variable and a bit of a fixed cost. So what we could do is we could put in a fixed cost and superimpose a variable cost on it. Does anyone know what they're called if we add a fixed plus a variable element? Well, this is what we would like to describe as a semi-variable cost. And what we spend a lot of our time doing is separating the fixed from the variable. Yeah? So, we've looked at some cost behaviours. We've looked at some cost classification. This, I hope, is absolute basic stuff, because this is the bedrock of everything that we do in ELCO and all of the management accounting papers going up, MMAC and MABU and MDCL and all of those. Okay. So with the simple stuff that we've talked about here, let's go and have a little look at the sort of thing that may be asked. So you've got a task here. Chippy Limited is in business as a furniture maker. Classify the following costs it incurred by behaviour: fixed, variable, or semi-variable. by ticking the relevant boxes in the table. So you get 4 marks for this. Okay. So I'm going to ask you the questions. Wood purchased for production. Now, they are carpenters. Well, sorry, they're furniture makers, pardon me. Yeah? Because they're furniture makers, presumably they measure out a certain amount of wood for a certain component or thing that they're making. So what do you think? Variable, fixed or semi-variable? We've got a 1 in 3 chance here just by guessing. What do you think? Well, I'll tell you what, I'm going to go with the consensus. I believe that that's a variable cost on the basis that we can measure with some degree of accuracy the usage of the material direct to the product that's being produced. Okay? Wages of carpenters paid on a piecework basis. What is the important term there? Well, in simple terms, the carpenter could be paid a rate per hour. But here they're being paid on a piecework, and that simply means for every unit they produce, they get paid a certain amount. If they are paid piecework, then they must be a variable cost, because there is a direct relationship between the units produced and the cost being incurred. Workshop heating costs consisting of a fixed and usage charge. Well, I think that somewhere here there is a clue in the question. There's a fixed element and there's a usage. So presumably there is a usage for when they use the workshop and they're doing stuff, as opposed to when they're not and they're not, if that makes sense. So I would suggest that we've got a classic fixed and variable element, and that's semi-variable. And therefore, without looking at the fourth one, I'm assuming it's fixed. Oh, I suppose we better read it. Salary of a workshop manager. Well, salary of a workshop manager is probably going to remain the same. When you see the word salary, it's typically fixed over a period of time. And from that perspective, we would tend to think of it as being a fixed rather than a variable cost. Although there could be other hints in there, okay? But yes, I think, as I guessed before, it's likely that this is a fixed cost, okay? Yes, it should be straightforward. This is where we just bang through, making sure that we're very careful to read carefully what the examiner has asked. How many times can I say carefully? Part B. Makewell is in business as a pharmacist, manufacturing and selling drugs. Is that what they're called nowadays? Right. Classify the following costs incurred by nature. So all we have to do is to say, are they direct or are they indirect? Now, if you remember, when we talked about direct and indirect, we talked about traceability, which is the name I wanted to give to my daughter when she was born. I thought it was a fantastic name. What do you think? Traceability? Yeah, my wife felt very much the same. So, okay, right. When we're looking at traceability, can they be traced directly and in full to the product, or can they not be traced directly and in full to the product? That is all we are asking ourselves. So, what job do they do? They're a pharmacist, they're a manufacturer and seller of drugs. So, all we have to ask ourselves each time is, can we easily link that cost to an individual product being produced? If we can, it's direct. If we can't, it's not. Insurance of the premises. What do you think? Yeah, it's indirect. There's no way you can link the occurrence of an insurance premium once a year with selling or making something bit by bit during the year. Salaries of pharmacists who make the drugs. Well, I think that the suggestion is that they must be direct, and it's this bit, who make. They are directly related to the making of the drug. that must be correct. Okay. Training course for the pharmacy assistants. Right, training is the sort of thing that happens once or twice a year, something like that. How can you link that easily to an individual production of a unit? I think you know the answer. You can't. So I think we call that indirect. And drugs purchased for resale, we buy it for a certain amount, we sell it for another amount. That's a direct cost. Must be a direct cost. So I'm hoping that what you see here is that we can do this. We look at ELCO. It shouldn't be difficult. If you've done the work, if you have understood thoroughly what your training provider has told you, then you should easily pass the exam. There are no ifs and buts. But like everything in the world, you can't just rock up and do it. You must have learnt something first of all. I hope I've managed to illustrate to you the ins and outs of this very basic but also fundamentally important aspect of management accounting. Because cost classification is something that you will use in management accounting again and again and again and again. It is that fundamental bedrock upon which everything else is built. So that is task 2. I hope you have enjoyed task 2 and we look forward to seeing you next week for task 3. Exciting stuff. Anyway, it's been great being here. Have a fantastic Friday and I look forward to seeing you next time.